Welcome back to the show. We got a great one lined up. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. You can follow us on X, YouTube, and digperspectives.com for exclusive content. Right now, it's $3.04 trillion market cap for crypto. The market's off 2.2%. Bitcoin, 93,800 plus. Ethereum stuck at 1758. XRP is $2.26. We're up 2% on the 24. We're up 6.4 on the 7-day. Range of price right now, ranging between 222 and 235. We'll keep an eye on it. I do want to let you guys know, and I know you've heard me talk about it, but there's still a lot of you that haven't taken any action. And I'm about to tell you why. It's Caleb and Brown. Listen, if you're frustrated with where you're keeping your assets and you want to have more control and you want to have more security, Caleb and Brown is the place for it. First of all, institutional grade custody for every retail investor, just like you and me, no charge. There's one flat fee. I'm telling you, this is the platform to be on, and not to mention the fact that the customer service is human people. It is someone you can call, you can talk to, you can set an appointment with, whether it's a technical issue with your platform, trying to get signed on and figure things out in the technical side, or whether you want to speak to a broker directly about your assets and how you want to treat them. This is the level of service that needs to be in this space across the board. And right now, Caleb and Brown is the leader. And I tell you what, and that's why I'm with them. And I think you should go open up a free account, xrpwealth589.com. I tell you, two-factor verification is nothing. They've got that and so much more built into their service and security. Check them out. You're going to love what you find, especially when you start talking to a human being. Look at this. And by the way, we're going to get into something that has been a topic that was brought up in this space and then quickly forgotten about. And I don't think it's a good idea to forget about it. So hang with me. We'll get there. Michael Saylor from MicroStrategy has bought 15,355 Bitcoin worth $1.42 billion. Here he goes again. Now, this guy's either going to be in the Hall of Fame for the baddest and most incredible investor in the world, or he's going to find himself in the Hall of Fame for the biggest loser in the world for the second time around. Remember, in the dot-com era, Michael Saylor was the biggest loser and lost $13 billion in the dot-com bust. Meanwhile, 36 states in the U.S. are advancing strategic Bitcoin reserve and digital asset bills. Here's a little map to give you the overview. We looked at it this weekend. But here's a more accurate representation of where they actually are right now in the stage of being approved and finalized. So here are the front runners. It's Arizona, New Hampshire, Texas, Alabama, and then Florida, and then Georgia. So this is where things are currently right now. So this is really cool to see this. And look, I think Michael Saylor is looking towards these things and understanding the federal level is headed towards a strategic Bitcoin reserve. And he's trying to get that first mover advantage. He's been here for a long time. He's going to keep doing what he's been doing, right? Well, here is Matt Hogan from Bitwise. And boy, I tell you what, he is excited. And he's talking about the 4-year Bitcoin cycle basically dying. And that is essentially because of what we talked about here on this channel. The amount of money from financial institutions, once there's really legal clarity for everyone to play in this space, is going to change the game. And the 4-year cycle, known as the Bitcoin cycle, may not necessarily go away, but it won't be the same overwhelming amount of effect that it has been in the past. Take a listen to Matt Hogan. And by the way, he'll be on stage at XRP Las Vegas. Get your ticket.
4-year cycle? Is it over?
Yeah.
Woo.
It's over.
Okay, hold on. Explain.
Well, I mean, so my view of the 4-year cycle is you have a catalyst that brings new pools of capital in. So 2011, it was the launch of Coinbase. Retail investors could buy Bitcoin, new capital, then leverage builds up and eventually it pops. 2015, the introduction of Ethereum. 2019, DeFi. 2023, it was Grayscale winning its lawsuit in March against the SEC. We're going to get ETFs bringing in capital. The reason I think it's probably not going to play out over 4 years is I think that's a longer inflow of capital than retail hot ball of money, which was the past 3. And then secondly, we have yet another of those catalysts in November, which is the election completely changing the game in terms of institutional adoption. So even if the ETF-driven cycle would have built up, leveraged, and popped and receded, we have this second tidal wave that's just so much bigger than that first one. It's going to overwhelm it. So will there be, pullbacks? We're seeing one now as leverage comes out of the system, of course. But the election was such a sea change that it's like, it doesn't matter. Yes, there may be this natural thing, but it's just going to get bulldozed over. That doesn't mean we've repealed pullbacks, but I think this cycle is going to be much longer than people think. I definitely don't think this pullback is the end. I think 2025 will be a great year. I think 2026 will be a great year. I think 2027 will be a great year. And we'll see about 2028.
There you have it. I tell you what, it doesn't get much more bullish than that. Listen, across the board, I think getting the legislation passed is going to bring so much money into this space. It will be like the dot-com era. Meanwhile, well, we're going to get to that point in a minute. Here's an update and a revision, a correction here. This is the SEC approved the launch date of April 30th for ProShares Trust XRP ETF. Now, when I first found this over the weekend, I thought that this was a spot like most other people did, but you know what? It is not. So as a correction, this is a futures ETF. Then I got questions about it over the weekend. It was like, well, what's the difference? Well, this is a great opportunity to explain. So the correction is it's not a spot ETF. I was wrong about that. It's an actual futures ETF. But the difference primarily here is that with a spot ETF, they're required to buy the asset and back it with a qualified custodian. With the futures product, or at least this one here, they're not required to buy the asset. So you're just trading the paper, right? So there you have that. But that's still good news. Things are headed our way and they're all going in the right direction. And speaking of that, that is triggered, I believe, what we've seen in a bump with XRP jumped about 8% from that news and the ETF coming from ProShares and the futures ETF, right? So this is going to be interesting. Remember, we just had the Ethereum 2 times leveraged ETF launched as well, and they're super excited at the same time. But then there was this narrative not long ago. If you remember, we saw a couple different corporates actually, and we've seen corporates do this with Bitcoin, but we've actually seen a couple of corporates do this with XRP. X-Finance Bulls got it right here. XRP just got added to a NASDAQ firm's treasury. Not hype, not rumors. Real corporate money is entering, and it's just beginning. And he's absolutely right here. And if you look, I went and even pulled it up. It was Worksport, because I couldn't remember, was the first one in December of 24, right at the end of the year. Worksport announced their NASDAQ-listed manufacturer that they would be putting $5 million in Bitcoin and XRP for its corporate treasury. Now, this is interesting because Digital Commodity Capital did it just this month. They came out too and hold 103,000 XRP valued at $225,570 in its corporate treasury. And the move was seen as significant, signaling growing institutional interest in XRP. And I think this is something that really, really gains traction as we get the legislation and clarity going forward, which is really kind of the window that we're in right now. We could hear about stablecoin legislation today, tomorrow, right? I mean, it's literally on top of us like that. So here is a quick clip from Thinking Crypto, sitting down with crypto tax leader. It says that big banks are excited, altcoins are up next, and whispers of capital gains exemption. Uh-oh, sounds like it's still on the table.
I'm curious, with the repeal of SOB 121 and this favorable environment, are you seeing demand from banks? And I'm talking the big banks.
Yes. Yeah. That was a major barrier for a lot of the banks, and so we are actively involved in discussions with a lot of the, the major GSIPs. They are wanting to offer various types of products to their customer base. And I think, to start, right, a lot of it's going to be basic custodying, basic buys and sells, right? You're seeing ETFs. You might see, a lot of those ETFs were kind of focused just on Bitcoin or just on Ethereum. I think you probably might start seeing some more kind of diversified multi-coin type of operations. But yeah, the banks are excited. And because they are, again, it's kind of this general sentiment. I think, we're hearing a lot of whispers around this capital gains exemption altogether for made in America coins. All I've heard is whispers on that. Right. Nothing substantive. So don't quote me, but I think there's some enthusiasm around that potentially being in this bill as well. And if that happens, I mean, you're gonna see a huge ramp up, right? And so
that is an excellent point, and he's absolutely right. Which brings us to this. Let's listen. Another conversation about zero capital gains here, back on April 10th. Just take a listen.
So US-based crypto companies, now Trump is out there saying, hey, maybe we could eliminate or at least give better tax breaks when it comes to capital gains if you're invested in crypto companies that are based here in the US. So it goes back to that pro-America, make America great again theme that he's going for. How would that play out in a perfect world for a crypto investor?
Well, and Paul, you nailed it. This is part of his agenda to get people investing, building, buying, manufacturing, all the above in the United States. Mm-hmm. And so one way to do that is to say, hey, if you're a crypto investor, buy some tokens that are based out of the United States. And when you go to sell it, after 12 months, by the way, capital gain is after a 12-month hold. So you traders don't get, gleamy-eyed here. But after I hold this token for at least 12 months, I might get a reduced capital gains rate. Mm-hmm. And that's going to help. And why would he do that? Because it stimulates the economy in the United States. It creates jobs in the United States. What extent? But that's the theory. And I think in a perfect world, it'd be exciting. I just hope that the tokens I like are, going to be here in the US.
Yeah.
Always number one, my investors out there, you invest in what you know is best. Who cares if I can save between 15 to 20% on the tax bill, tax rate? I want to buy what makes freaking sense. Then it happens to align with a US-based opportunity, great. But let's not chase that. Let's chase what we know and is going to make us money, and then hopefully they coincide.
Yeah. Well, I think that's the point, is you look at some of the projects that we talk about here on the show quite a bit. Most of them are, well, quite a few of them are based here in the US, even though it seems as though there's a lot of the blockchain companies now vying for the idea to make sure that Trump and the administration knows they're a US-based company. Ripple, mm-hmm. You got guys over at XRP, obviously, and then places, projects like Solana, Avalanche, et cetera, that have kind of gone there. Hedera is another one. So
there you have that. Now let's listen to this clip from Sergey Nazarov from Chainlink. He breaks this down and explains how base assets can help the U.S. maintain its advantage in the global financial system. Now, the way he explains it here, he's not talking about the zero cap gains advantage. Here, he's actually talking about the proliferation of a new asset class in general. And I just want you to hear the way he says it, even though this is slightly different. It's not about zero capital gains, but it comes back home to the point. I'll address it in a second.
Buy this asset and either hold it or repackage it for resale in another financial system, which is fundamentally what every financial system, including the US, wants. They want their financial system to be the place where the base asset is generated, and then they want capital to flow in from outside of their financial system, acquire the base asset, and put it in the other system. And how many times it gets wrapped and rewrapped and repackaged from there doesn't matter as much. That can even be done by teams that are based outside the US. Because fundamentally, the more US assets they are able to successfully wrap and repackage and sell, the more demand there is fundamentally flowing back to that issuer of the base asset, which in this case would be, the big US banks, the big US asset managers, US fintechs, and so on.
Now think about what he just suggested here. And we're talking about the birth of a new asset class here. And then combine that with the notion that some of these U.S. domiciled assets could, in fact, end up getting reduced tax or a zero cap gains tax, which would incentivize everybody to want to be a part of those networks. Guess what else it would do? It would make everyone want to build their new idea and new protocol right here in the U.S. Then you take the idea of what Sergey said and proliferate this new asset class, these protocols and tokens, and then you start launching products on top of them. Wrap paper products, ETFs, futures, spots, the rest of it. Now, this is where the market gets really, really big, really, really fast over time. To me, this makes a lot of sense. And now maybe it's just that, and I've played this before about why zero capital gains, US domiciled digital assets could be the driver and the catalyst that brings the world's activity and tokenized value to those chains for that incentive. And remember, the Honorable Cristian Carlos said this one time, he who has the gold makes the rules, but he who controls the payment rails runs the world. And I find that to be the moment that we're in today. And if we see zero cap gains come out, does it come out for all of us, retail folks too? Or does it just come out for the people holding money transmitter licenses and are qualified financial institutions? The question remains, but nonetheless, I think there's a there. We just don't know exactly what that there looks like yet. And that's what I'm excited to find out. Meanwhile, I'm going to leave you with this. Analyst Egrad Crypto believes XRP is following its 2017 fractal. Expect surge from $27 to $120. I tell you what, this is an OG. He's been here for a long time. And when he sees something, he says something. And when he doesn't, he shows you what he doesn't see. For this to even be a possibility for the chart to speak like this doesn't mean it's going to happen. But it tells you if history repeats, it's going to. Not financial advice from me or anyone else. It's just my digital perspectives. I'll catch all of you on the next one.